Hey guys, Steve Ferguson here, Thrive Mortgage. Today I want to talk about a question I get asked all the time. How do I get rid of my mortgage insurance? So first, let's get started. What is mortgage insurance, aka PMI? So PMI, or mortgage insurance, is just like it sounds. It's insurance on your mortgage loan. So what does this do? Does it do anything for you? No, it doesn't do a thing for you. So mortgage insurance protects the lender in case you default on your mortgage. That insurance policy covers a portion of your mortgage. That's the reason most lenders like you to have mortgage insurance on your loan, because it guarantees them some payback in case you default. Doesn't mean they think you're going to default. It just means that in case you do, I would like to have an insurance policy to protect myself. So FHA, VA, USDA, those are all government loans. All have mortgage insurance regardless of how much money you put down, and the mortgage insurance amount varies. VA doesn't technically have mortgage insurance. They have VA funding fees, so we won't worry about VA today. But FHA, USDA, they definitely do. Conventional loans that are above an 80% loan to value have mortgage insurance as well. Okay, so you have a loan, you've got an FHA home loan, and it has mortgage insurance. How do you get rid of mortgage insurance on an FHA loan? Simple answer is you don't. So I take that back. That's not true. You can, but I'm going to walk you through it. So FHA has mortgage insurance, especially if you've done an FHA loan recently, has mortgage insurance for the life of the loan. Doesn't matter how much you owe, how long you've been paying on it, FHA will always have mortgage insurance. Okay. Now, you can get rid of mortgage insurance on an FHA loan only if you refinance. So you'd have to refinance it, which does cost money, into a conventional loan or some other loan type. Assuming your loan to value was less than 80%, the mortgage insurance would go away. So there is a benefit for refinancing if that makes sense. Now, in a conventional loan, you have more flexibility. When you close on a conventional loan, the mortgage insurance is designed to automatically fall off after about 7 or 8 years. And that's based on the algorithm of payments that by that point in time, you should have about a 20 to 22% equity position in your home. However, you do not have to keep your mortgage insurance on your loan for that amount of time. So most lenders have a rule that states mortgage insurance must be on the mortgage for between 1 and 2 years before you can remove it. After that period of time, if you can get an appraisal on your property and it shows that you have at least a 22% equity position in the property and your current lender accepts it, they can remove the mortgage insurance on your behalf, and it doesn't cost you really anything beyond an appraisal. So before you do those things on your own, you always want to call the lender first to make sure you're doing it the right way. Ask them about how long they require mortgage insurance to be on there. And then you can, make sure that you pull the trigger on what is necessary to get it removed. So it's not complicated. It's just a matter of making some phone calls and then checking the boxes to make sure you're good to go. You can always refinance. You can always pay more principal on a conventional loan to get it below the 80% loan to value and get the mortgage insurance removed that way as well. And that's something you can talk to your current lender about. Well, guys, I hope that was helpful. It's not complicated, but it doesn't really help you on mortgage insurance. So you definitely want to get it removed if you can. And refinancing may be the best way to do that. And I'd love to visit with you about that if that fits your needs. All right, guys, have a great day. Thanks for listening. Bye-bye.